What's up, guys? Mr. Free Coiner coming back to you again. I hope everyone's doing well. And here I really wanted to go over the options that we will have once we've reached some of the prices and the points that we're really expecting with XRP. Okay. Now, before I get started, I am not telling anyone what they should do with their coins at all. I just really want to explore the options that we have and, what the repercussions would be behind each choice. So this is just something that I speak with friends of mine about and just kind of, I like going over it because this is a new world that we're dealing with as far as financial. So I think it's very important to make the right choices as we move forward and, as we see the prices go up and all of that. Now, some of you may be aware that I have put out a video that kind of went over this, but again, I really wanted to go more in depth on the sites and what the options are and what happens. Do you want to sell out? Do you want to take out a line of credit or a loan or whatever on your coins? So anyway, I want to go ahead and get into that. And the first of the two that I'm interested in, and I know that this particular space, I guess, it's going to explode. Okay, because this is essentially, these are the new banks. Okay, so I have taken out lines of credit and all that stuff before, and to be honest with you, a lot of times it works very well. If you just have to make sure you stay on top of it. But see, the other dynamic with this is that the collateral that you're actually using, it's not just the fact that you're getting money, because with that, when you're dealing with just regular banks or credit unions or whatever, those lines of credit are really just based on your credit. Okay, and there's really no I guess nothing that you're putting up to really get that money. But in this case, you're dealing with your XRP. Now, let me ask you a question. Okay. So say you have 10,000 XRP and you want, and XRP is $100. Okay. You want to use 1,000 XRP to get $100,000. Now, we know that XRP is going to go much higher than $100. So the question is, would you want to actually sell those coins, or do you want to take a line of credit out on it, on the coins and keep the coins? Okay, now they're up as collateral, but they still technically belong to you, simply because you can always pay the loan off and get the coins back. Now, personally, my view on it is the wise choice for me would be to take a line of credit out. I mean, when you look at the benefits of it, to me, it's a no-brainer. Now, the one percenters, this is what they do. This is what rich people do. Okay. If they have an asset that is worth a lot, but they know the value of that asset is going to increase, why sell it? Okay. It doesn't make sense to actually sell it. What they do is typically they will take that asset, they will take a loan out on it, or take a line of credit out on it for whatever amount. They'll take that money, they'll put it in a high yield account to where they're getting interest off of that money now. So now, instead of waiting for the asset to actually increase in value, they are doing both. They're waiting for the asset to increase in value, and they are earning interest on that money that they got. Okay. So it is really a win-win, and that's kind of what we're looking at here. Okay, so let's go ahead and look at this. Experienced team, 10 years of fintech success, reputable advisors, compliant asset-backed token, monthly passive income. I mean, now of course you have to do your research on all of this stuff. It's highly important. But just looking at the benefits right here, why investors prefer Nexo tokens. Okay, so basically meaning that if you were to take, say you take your, you get a line of credit out on your money, on your coins. If you take that and maybe buy their Nexo tokens, you can earn money on that. I mean, I'm thinking that is how that can work. I can't see any reason why it wouldn't. But or you can transfer, or instead of selling your XRP outright, you take whatever coins you want, transfer it into Nexo coins, and earn 30% from the company's profits. Okay, so however you want to do it, I'm sure they can give you multiple options to do so. But the fact is, there are many ways that you can make money using this. I mean, I'm only seeing some really good good outcomes here, and one of the main things that I like about this is that you don't have to be concerned about taxes, because this is just a loan. You don't get taxed on loans. Okay, so you can have access to money. You still have your collateral or your coins, and you don't get taxed. So any money you take out is the money that you have access to. You don't have to worry about spending any more on Uncle Sam's desires. So yeah, I mean, I personally like this a lot. I can't really, I mean, of course there are some negatives to it. As far as, yeah, you're letting someone else keep your coins, but again, they never leave your actual possession. You still have access. It's because this is the thing. If you bought coins at 30 cents and they are $100 now, if you sell those coins, you will never get that value back. Okay? You've sold the coins. You sold them out at $100. Yeah, you got $100,000. Now, that same 1,000 coins in another year, if XRP hits $1,000, you have lost a huge amount of money. You only took out 10% of what it would have been worth. Effectively, you have lost 90% of the value, of the potential value on those coins, and they are gone. Okay? They're gone. So this is something that you have to consider. You have to look at. Now, I'm going to go ahead and go over to, oh man, where was it? Hold on a second. Oh, here it is right here. Okay, so Nexo versus alternative financing options, okay? And traditional lending. All right. So let's go over the financial financing options. Speed of funding. Nexo is instant. In these other two, sell asset and buy back later. Slow, of course. Yeah. Margin lending, futures contract, dependent on asset. Okay. So we don't have to go over that again. Asset ownership. Yes. You don't own the asset after you have sold out or whatever. Benefit from asset value appreciation. Yes for Nexo. No for the second option, and yes for the third option. So, okay, you only earn benefit from the asset if you still have access to it. I mean, guys, if you sell your coins, and again, I'm not telling you not to. Everyone can do what they want. If you sell your coins, they are gone. I cannot emphasize that enough. they are gone. Bye bye. You lost any future value on those coins. They are simply gone now. Okay. Exchange fees. No exchange fees on Nexo. Yes for the other two. Tax liabilities. No tax liabilities on Nexo. Yes on the other two options. Volatility risk. Low on Nexo. Not applicable for the sell. If you sell it, it's gone. I mean, you got the money. And futures contracts, whatever, high. Free credit card. You get a free credit card with Nexo. Accepted asset types. Okay, so cryptocurrencies, yes. Tokenized assets, yes. Utility tokens, yes. Gaming tokens, yes. So they do have several options that you can look at. And so these are the ones that they currently you currently have access to cash out on, which you have, of course, XRP, Tron, of course, Ethereum, I mean, on and on, BNB. So you would have access to being able to utilize these coins and keep that asset as well, or take money out on it. And okay, so let's go to the next options here. Traditional lending, crypto assets accepted, yes. Traditional lending, no. Keep asset ownership, yes. I mean, again, I cannot emphasize enough. Keep your asset. This is what, years ago, I heard that Michael Jackson took a loan out on his Beatles albums. Initially, they just said that he had a 250, I think it was a 250 or $240 million loan. But later on, I found out that it was a loan that he took out on his Beatles collection. Okay, the Beatles albums that he had. And I always wondered, I was like, why did he do that? I mean, now, I'm thinking with my, with the mind that I had, just like normal people have. I mean, we are working folks. So we always look at getting things on credit. Okay. So, I always wondered, but now I understand, because the value of the albums were simply going to go up. The only way he could ever lose on that is if he spent all the money and, something negative happened from that. Okay. Which I'm more than sure that he had his financial advisors, and they probably told him to go ahead and do that. I mean, because that was back in, I don't know when it was several years ago. I think it was back in the 90s, I want to say. And now just imagine what they're worth now. They could be worth twice that. So who knows? I have no idea. But the fact of the matter is, he still maintained ownership of the asset. Okay. Approval time, instant. Availability, worldwide. Hidden fees, none. Credit checks, no. So to be honest with you guys, well, let's go into this last one. I just want to kind of wrap up with some other stuff. Instant crypto background, 10-year lending, 10-year-old lending, European fintech. Application process, instant and automatic. Product, flexible loan, collateral release. The value of crypto assets exceeding the loan limits are always available for withdrawal. I mean, guys, crypto, this is Nexo.io. So you can always go in here and check this out for yourself. But anyway, repayment options, you can pay in USD, you can BTC, whatever, BTC, ETH, or Nexo. Additional fees, no. Token type, dividend paying, asset backed security, token with utility features, token benefit, dividends, discount, asset backed, coverage worldwide, Big Four auditor. Yes. So, guys, this is just, as I've said, when you compare it with selling out your coins, getting a line of credit, in my opinion, and only in my opinion, is a much better option. Okay. It's a much better option. Now, if you go off and you talk to someone who does not have, any experience with these types of things, who thinks, just the same way we've always thought, and that is get things on credit, then, you know, you might hear anything. I mean, even myself, I've spoken to people who have, and recently, who have gone this route. Okay. And from what they have told me, the better option is to always keep your asset. That's always the best option, because once you lose your asset again, it's gone. Okay. So, another thing, like I was saying, us regular folks who work for a living and, you know, who only get so much money every month or whatever your pay period is, we always want to get things on credit. Okay. So credit costs money. For someone to finance a loan for you, it costs money. So you're going to pay interest on whatever loan that you get. Now, is it wise to do that? Well, if you don't have the money to pay it off, then it's your only option. But it's not the wisest thing to do. Why is that? Because you're paying more money that you will never see again on whatever product that you're buying. For example, you buy a car. You get that car with a 6 or 10%, whatever interest rate you get. Okay. You only keep that car for 2 years. Well, not only are you paying on the principal of that car, which is typically in the very first years of owning the vehicle, you're paying very little. You're actually going to pay more on the interest than you are on the principal. So you're actually paying double the amount on that vehicle than you would have if you just bought it outright. Okay. So let's go through just two scenarios. Man, this video, it doesn't take long, 17 minutes already. So you buy a car that's $30,000. Okay. With interest, that car is going to cost you, we'll say $42,000. Okay. We'll just say that. All right. So in those first few years, you're going to pay the majority of that interest. Okay. They want to get it off the top. So now this $30,000 car, of course, costs you $42,000 over, when you finish paying for it, which is, when you think about it, it's really kind of robbery. Okay. But if you buy the car outright, you have the money, you just pay the $30,000 outright. Okay. And say you're only going to keep the car for 2 years. All right. So yes, you do have depreciation on the vehicle, which the same thing goes for if you buy it on credit. But the difference is that you're able to take advantage of the entire value of that car if you bought it outright. Okay. Whatever, so if it was $30,000 when you bought it, and when you get ready to trade it in, now it's worth, say, $24,000. Okay. So you still have $6,000 available, or rather you've lost $6,000 on the car, but you have the $24,000 remaining. Whereas if you had it on credit, if you did not have it set up to where you paid more to pay the principal down, you may be what, as I'm sure many people have seen, upside down on the vehicle. I used to sell cars. I mean, this is what happens. The smart thing to do, okay, and you can ask around, don't take my word for it, but the smart thing to do is to always buy the vehicle outright. Okay, just buy it outright if you have the money, because that way you don't pay extra on the vehicle. You don't pay extra on the asset. Okay, that's the main thing. You don't want to pay any more than you have to. That's the trick of credit. So when you have good credit, you're basically telling a creditor, hey, I'm good for the loan, but you're essentially, no matter how good your credit is, you can only minimize the amount that you pay them. In our cases, where we're headed right now with XRP, we're going to have the ability to eliminate paying extra on anything that we buy when it comes to large purchases, whether it's a house, a car, whatever. If you have the money to pay it outright, that's the best option. Okay, this is just what I've learned and what I've, spoken to people about. So anyway, guys, as usual, make sure you do your own research and make your decisions based on that research. Okay, these are just my opinions. This is something that I am personally going to do, but please take it with a grain of salt. And again, do your own research. Until next time, guys, take care of yourselves and God bless.